Stocks. Euro slip as ECB sets charge hikes. CPI looms. New York, US and European stocks slid whilst benchmark Euro region yields hit an 8-year high on Thursday after the European Central Bank organized to hike hobby costs next month for the first time when you consider that 2011 and as pending inflation statistics spooked buyers. While the ECB choice turned into extensively predicted, the opportunity of a larger hike from September weighed on sentiment because the Euro quarter financial system grapples with slowing growth and soaring inflation. Shares on Wall Street tumbled, with the S&P 500 and Nasdaq falling greater than 2%, as the market awaited the discharge on Friday of the U.S. Purchaser Fee Index for May. CPI is a big wide variety, said Jack Ablin, Chief Investment Officer at Crescent Asset Management LLC. It's funny, the employment report historically has been vital, but inflation is sincerely taking center stage. For months, markets have centered on how fast important banks have been shifting to shrink inflation. Investors now expect the Federal Reserve to hike rates by using 50 foundation points subsequent week, particularly if U.S. CPI information confirms an extended inflation analyzing. Ablin believes inflation peaked in March, with prices for lumber and copper already in decline. But crucial bank price hikes additionally ought to gradual monetary boom. The ECB stated inflation would continue to be undesirably extended for some time, and the White House has predicted Friday's information additionally can be accelerated. Bill Papadakis, a macro strategist at Lombard Odier, said markets see the ECB's coverage price peaking above 2% and portend slower growth. We think this will make monetary coverage restrictive, and doubt that the Euro vicinity's economic system should sustain such tight situations, given its gift challenges, Papadakis stated. The Reserve Bank of Australia this week hiked extra than expected, stated Joe Menimbo, senior marketplace analyst at Western Union (NYSE) Woo Business Solutions, whilst the ECB struck a extremely much less hawkish tone, and as a end result, we've seen the Euro zigzag. He known as the ECB's greater gradual charge hikes underwhelming for Euro bulls. The euro fell 0.93% to $1.0616 in opposition to the greenback, as the dollar index rose 0.73%. But bond yields across southern Europe rose sharply after the ECB flagged a string of future rate hikes. The ECB seems to be approximately 6 months in the back of the Fed as a minimum in phrases of motion and possibly mindset, too, Ablin stated. With euro sector inflation at a record high 8.1%, the ECB had already flagged a sequence of moves, consisting of finishing its long-running asset shopping for software on the end of June. The ECB spelled out plans to raise prices a quarter factor next month and probably half of a point once more in September for its first 50 basis point circulate in 22 years. Germany's 10-year government bond yield, the principal proxy for European borrowing rates, surged to its maximum level in 8 years at 1.47%. The bund later changed into little modified at 1.437%. Yields on 10-year U.S. Treasury notes rose 1.6 basis factors to 3.046%. The ECB released new forecasts that raised inflation this 12 months to 6.8% from a prior 5.1%, and reduce its boom outlook to 2.8% from 3.7% due to sky-high electricity and food fees. Graphic. Euro quarter inflation is at file highs, concerns approximately inflation and the effect at the financial system sapped risk appetite. The Pan-European Stoxx 600 index fell 1.36% and MSCI's gauge of global stocks closed down 2.02%. On Wall Street, the Dow Jones Industrial Average fell 1.94%, the S&P 500 misplaced 2.38% and the Nasdaq Composite dropped 2.75%. Asian shares fell in a single day. MSCI's broadest index of Asia-Pacific stocks out of doors, Japan lost 0.5%. The Japanese yen slipped to a 20-year low in opposition to the greenback at 134.55. A widening coverage divergence has pressured the yen, with the Bank of Japan final one of the few worldwide relevant banks no longer but signaling better prices. FRX. Oil expenses dipped after parts of Shanghai imposed new lockdown measures. Still, robust profits in refined merchandise supported crude fees near 3-month highs. U.S. crude futures fell 60 cents to settle at $121.51 a barrel, and Brent settled down 51 cents at $123.07. Gold charges as better Treasury yields and a corporation greenback dimmed bullion's attraction. U.S. gold futures fell 0.2% to $1,852.80.